Hello everyone, this is Kaushal Maroo. I track the automobile and the auto ancillary sector at DSP Mutual Fund. I'll take you through a medium-term outlook on the sector. To give you a broad context, auto sector is about 6% of the index weight of the Nifty 500 and accounts for about 5% of the profit pool of the industry. A good way to start thinking about the future is to see how things have panned out in the recent past. We come back on 3 very weak years of the demand environment in the auto sector. It started in FY19 when in the second half of the year the NBFC crisis hit us and lending to auto consumers was significantly withdrawn, because of which demand environment significantly weakened. Then in FY20 we had the BS6 migration, and because of generally slow economic conditions the demand saw an unprecedented fall. When one would have expected things to come back in FY21, the pandemic hit us. So these 3 years of weak demand environment have led to categories like PVs and CVs now clocking volumes which were almost there about a decade back. So a decade of no growth in volumes has led to a sharp drop in the profitability of the sector. The EBITDA margin of the sector is at a decadal low. Weak volumes, weak margins led to a weak ROC profile for the sector as well. If you think about it, the conditions are ripe for a mean reversion in both volumes and profitability of the sector. That's what people are already beginning to play for, and you will see the valuations are at historic highs when most of the fundamental parameters are weak, is because people expect a recovery happening in the medium term in this sector. So mean reversion is broadly what we are calling out for the sector. While we expected a cyclical recovery to start panning out from FY22, there have been still further external challenges which plagued this year. In Q1, we had the wave 2 of the pandemic related lockdowns. Then in Q2, we saw a very sharp increase in commodity prices, because of which the gross margins in the sector came off sharply. And then in Q3, the supply of semiconductors got impacted, because of which categories like CVs and PVs are not able to live up to the full potential of demand. As we sit today, most of these new challenges of FY22 are getting addressed. The high level of vaccination are reducing risks of further lockdown. The semiconductor supply situation is improving, and it doesn't look like that the commodity prices are likely to haunt us as much as they did in the last calendar year. So FY23 to 25, we expect most of these concerns to be behind us, and because of which we expect a double-digit volume growth in most of these categories. What could help is things like robust infrastructure spending from the government, revival in replacement demand, which we have been missing for the last 3 years, and general coming back of rural demand gradually. While the mean reversion in volumes and margins play out, there is one important factor which we would like you to take note of. That is the very sharp increase in penetration of electric vehicles. In fact, in markets like Bangalore, Pune, Mumbai, the metro cities, the penetration is far above the national average. Generally, this is an important indicator of how things are likely to move in the future as well. Companies on their part have been lining up products to be launched on the electric vehicle side. As the transition from the ICE vehicles to electric vehicles happen, there will be certain categories which will be impacted more and certain will be impacted lesser. There will be companies which give us more confidence because of their R&D capability or the product portfolio that they have to be able to gain market share in the electric vehicles, or to be at least able to tide over the other concerns of this category. So there will be a set of companies for which electric vehicles will become a threat, and for others it will become an opportunity. What one needs to think about is that in this mean reversion theme that we are likely to play that we are looking to play in the auto sector, we also marry it with the theme on electric vehicle side, which are the companies which could see a product portfolio enhancing in electric vehicles? Which are the categories where the disruption of the risk of electric vehicles is lesser? That is how we are thinking about our portfolios. That is how we are looking to position ourselves to be able to benefit from both these trends. In the end, I would just like to say mutual fund investments are subject to market risks. Read all scheme related documents very carefully. Thank you.